Comparative market analysis is a fundamental concept for the national portion of the real estate exam because it requires you to distinguish between the informal estimates provided by a real estate licensee and the formal valuations provided by a licensed appraiser. A comparative market analysis, commonly known as a CMA, is a tool used by agents to help sellers determine a listing price or to assist buyers in making a competitive offer. It is strictly an informal estimate of value and does not carry the weight of a formal appraisal. One of the biggest points of confusion on the exam involves the regulatory environment surrounding these reports. While a formal appraisal must strictly adhere to the Uniform Standards of Professional Appraisal Practice, or USPAP, a CMA does not have to meet these rigid standards. You will often see exam questions asking if a real estate agent can use a CMA to help a client get a loan. The answer is always no, because lenders require a formal appraisal conducted by a licensed professional to ensure the property provides adequate collateral for the mortgage. When an agent builds a CMA, they focus on three primary types of property data, which are recently sold homes, active listings, and expired listings. The recently sold properties are the most significant because they represent what a buyer was actually willing to pay and what a seller was willing to accept in a closed transaction. This is the most reliable evidence of market value. Active listings tell you about the current competition in the marketplace. They show what other sellers are asking, but since they have not sold yet, they only represent an aspiration rather than a hard fact. Expired listings are equally important for the exam because they show what the market will not accept. If a property was on the market for 6 months and did not sell, it is a clear indicator that the price was likely too high or the condition was poor. A common exam trap involves the terminology used to describe a CMA. You might see a question asking if an agent can call their report an appraisal if they are very experienced. The answer is a hard no. In fact, in many jurisdictions, calling a CMA an appraisal is a violation of licensing law. You must always refer to it as a market analysis or an opinion of value. To help you remember the three core components of a CMA, use the phrase "sales are everything." The S stands for sold properties, which are your best data points. The A stands for active listings, which represent your current competition. The E stands for expired listings, which represent the price ceiling the market has rejected. When you are looking at these three categories, you are looking for properties that are similar in size, age, condition, and location to your subject property. Another area where students get tripped up is the cost of a CMA. While appraisers charge a significant fee for their regulated reports, CMAs are usually provided for free by agents as part of their service to potential clients. If a question asks about the primary purpose of a CMA, remember that it is to help a client make an informed decision about pricing rather than to provide a definitive valuation for a third party like a bank. By keeping the distinction between an informal agent estimate and a formal appraiser valuation clear, you will be well prepared for any questions regarding market analysis. Real estate agents should always explain that the CMA is a snapshot in time. Because the market is constantly changing, a CMA prepared 3 months ago is likely no longer accurate. This temporal nature is another key difference from appraisals, which, while also snapshots, are often given more longevity in a legal or lending context. You should also be aware that some states allow for a broker price opinion, which is slightly more formal than a CMA and often used by banks for distressed properties. But it still does not reach the level of a full appraisal. On the exam, focus on the fact that the agent is comparing the subject property to these three categories of comps to arrive at a range of value. If the exam asks which category provides the most information about competition, you should select active listings. If it asks which category shows what the market refuses to pay, you select expired listings. If it asks for the most accurate reflection of value, you always go with recently sold properties. This distinction is the bedrock of correctly answering valuation questions on the national exam.